think it's very positive moving forward, and I'm going to kind of get into that. So let's look at the investment strategy and planning moving into 2024. Now, we've talked about this a lot. It bears repeating, but the S&P 500 Capital Weight Index, this is the index that everybody sees on TV. It's shown with the NASDAQ and the Dow. But as we've reported, the S&P 500 and the Dow, which usually kind of ran in tandem, separated. There was a divergence right around May of this year where the capital weighted index moved forward, up, continued to get the gains, and the Dow Jones started going sideways. And people ask, well, why is that? Why is there a divergence? Well, again, it's because the S&P 500 is capital weighted. Well, what does that mean? Well, think of it this way. News Corporation is literally the smallest company in the S&P 500, and it represents about 0.008% of the S&P 500 index by weight. Again, a small company. Conversely, you've got Apple. Apple is 777 times the weight of that smallest stock. So as you can imagine, it has a much greater weight from a return standpoint within the S&P 500 index returns. In the S&P 500, you've got the tech titans. They represent 25% of the overall weight of the S&P 500. Well, conversely, that means you've got 492 or 93 stocks that only represent 75%. And the illusion out there right now is this. Those tech titans are killing it. In other words, they're up 50%, 75%, 100, 120, 140%, depending on which one of those stocks you look at. And that is actually putting them in a position where the S&P 500 capital weight returns, generally about 92% of the returns are those 7 or 8 stocks. Now, looking at this chart, you can look back where the bottom was in 2022 of the S&P 500 capital weighted. Now, what I want to show you again is really how is the broader market running? Is it on a tear like the capital weight is, or is it going on a different trajectory? Well, this is the S&P 500 equal weighted. It gives you a better understanding of what the broader market is doing. So from the broader market, you can see we hit bottom again in October of 22, but we've pretty much violently walked sideways. Now, I'm going to take it a step further. So that's 500 large cap stocks. What about the Russell mid cap, which is 3,000 stocks? Again, hit bottom in October of 2022 and is on a downward trajectory towards that bottom again. Could very well be that double bottom that everybody's looking for. But this is 3,000 stocks, again, that's going sideways. What about the Russell 2000? Small cap stocks. They actually hit the bottom just recently and are moving back up, but again, violently. But it's on a sideways trajectory. Now, could this mean that we've hit the bottom in the Russell 2000 and are ready to go forward? Well, that remains to be seen, but certainly we are a lot closer today than we were 6 months ago. And as Rocky said, I think we want to be positioned in the equities market to be able to get these returns.